There we go. Good morning, everyone. Welcome to the Buying a Home in the Netherlands webinar. Thank you very much for joining us today on this surprisingly sunny day, actually. At least here in Amsterdam, the sun is shining again. So I'm happy about that. It's always a bummer in the Netherlands if it's cloudy and it's cold, then it can be quite depressing. But when the sun is out, it's actually quite nice, to my opinion. So thanks again for taking the time today. Let's see. So we think, well, maybe it's easier if I introduce myself first. My name is Ludo. I am a buying manager at Expat Housing Network. I am, like I just mentioned, stationed in Amsterdam, so responsible for the Amsterdam area as well. Think of Zaandam, Haarlem, but also Almere, Amstelveen, and the greater Amsterdam, so to say. I live in a new build property here in Amsterdam. I'm a proud father. Not of kids, but two lovely kittens. If you're lucky today, they might show up on the screen. There's one meowing right now, actually. Open the door for her very quickly. That's this little monster. Yeah, besides that, been with the Expat Housing Network since the beginning of December of 2020, actually, so almost 2 years now. Well, came all the way up to housing specialist nowadays. I don't do it by myself, and that's where the next slide comes into play. I think greatness is achieved in the agency of others. What do I mean with that? Is that well, we have a great team to accomplish everything that we're doing here. So we have Giovanna, who's from Brazil, but actually speaks Portuguese, obviously Spanish, but Dutch as well. So that is fantastic. She's responsible for the southern part of the Netherlands, more towards Eindhoven. Then we have Rafaela. She's here with us today. She is also from Brazil and responsible for the top part of the Netherlands, more surrounding Groningen. She's with us here today to answer all the questions that you guys might have during the webinar. So if there's anything that pops up, just pop it in the Q&A, and then she'll be able to answer everything live. And then we have Ellen from the Netherlands, but has lived in Thailand for the majority of her life, and Rick, who is also from the Netherlands and has lived in South America and South Africa for a bit as well. He's more responsible for places like Rotterdam and Den Haag. So with the whole team, we try to cover the entire part of the Netherlands. Well, that's also why the webinar is called Buying Your Home in the Netherlands. A brief introduction to EHN. Well, good to know is that we aren't traditional real estate agents. That's because we merely focus on the buying side of the process and the renting side of the process. So we don't sell properties, we don't let properties. We are really specialized in securing properties for our clients, either on the buying side or the renting side. We charge a fixed fee when we do that, so we don't charge a commission. You always pay the same price. Doesn't matter if you're buying for 200,000 euros or for 2 million euros, it's always going to be the same price. Well, as you mentioned or saw in the previous slide, a majority of my colleagues has lived abroad, actually, so we know what it's like to settle in a new country. The added value from Expat Housing Network is that selling agents take offers from EHN more seriously, just because they know that we are specialized in expats, but also know what the process, the buying process, the renting process looks like. So if you compare it to someone who doesn't have an agent, then they will, well, 99% of the time move forward with an offer that comes from EHN. Selling agents, they typically prefer to give out viewings to people with a buying agent, and that's why it's a lot of times possible for us to book viewings when a typical consumer is not able to do so anymore. Plus, they'll have dedicated days for people with buying agents, and those are specifically for people like us. Majority of our team speaks Dutch. That's why we also support by reviewing Dutch legal and property documents, especially when it comes to older properties or properties that are part of a homeowners association. It's very important to know what you're buying, to know that the association is healthy, that the municipality has everything in line for you to have a pleasant stay there. So we'll definitely review that. This is a very important one. We'll touch base on this a little bit later, but we also help define market value through market data. As you might have heard before, is that the value that you see on Funda or purchase price isn't always market value. So banks will only look at market value, and that's why it's definitely important to know that. Well, this correlates a little bit by the supporting of the Dutch legal documents, but we will inform you about the rules and regulations that apply here in the Netherlands, or even to the specific cities or neighborhoods that you're looking in. And most importantly, we'll make sure you don't make the same mistakes as we did when we purchased our homes. I'm not here by myself. I'm joined here with someone from Mr. Mortgage, not just someone, Mr. Robin Uijtdehaage. Would you like to introduce you and your team?
Well, I don't know how I can trump this introduction, but thanks so much. Thanks again for hosting, Ludo. Always very nice to join here. I've changed my appearance a bit, but I'm Robin Uijtdehaage. You can recognize the second one on the left, and I'm joined always by my wonderful team of Cesar, Egle, and Uskan. And all of us, we have in one way or another an experience when with moving abroad or coming to the Netherlands, settling down here, where it is, where you currently live, or what we experience. So that's basically what our goal is, and also what our passion is to, and the drive to help you guys to find the best property. Well, not necessarily that, because that's what Expat Housing Network is for, but we'll help you with your finances. So basically from start to finish, so from the moment that you start considering, well, hey, should I buy a property, and does it make sense for me, or does it make more sense to continue renting for some time? That's where we'll start. First, to kind of get an idea, what is your situation and what are your options, and how does it actually work in the Netherlands? Because it can be considered a bit of a maze, it can be challenging, but in the end, if you work with people that give you the correct information, and there we are, you definitely can manage without any necessary stress level or anything. So that's what we do, guide you through the whole house hunting process. Joined by my colleagues, financial specialists, Uskan and Cesar, and Egla, our growth marketeer, of course. So that's basically what we do. Tell you something about myself. I've been living in Amsterdam for the better part of my entire life, really. Really enjoyed here in the Netherlands, and I'm very excited to help you guys finding your place in Amsterdam or in the Netherlands as well. So I'm very curious. Let's proceed with the presentation, Ludo, and take it away.
Fantastic. Thank you very much for introducing you and your team. So for today, you know what? I am going to change presentations for 2 seconds. I think we are in the beginning of the presentation, so I can still feel free to do so. Like I mentioned before, we introduced ourselves, but I think it is also nice to see who we are actually talking to. So what we did, we prepared a little poll just to see how you came across this webinar, who you are actually, so what age range, what your household looks like and everything. Obviously not obligated to fill in, but it's always nice to see if we can tailor the webinar a little bit to the specific audience that we're talking to. So I'm just going to give you a few seconds to fill this in. We're already getting some nice answers in. So the majority is within the age range of 25 and 34. I'll tell you later on why that is actually nice. Nice mixture of single couples and families. And this is always what I like to see, is what made you decide to buy. That's still the majority of the people want to buy because they would like to settle in the Netherlands. That's always a nice compliment. And the majority is looking in Amsterdam. Well, I can't blame you. Most beautiful city. Cool. All right, I'm going to close it off so we can actually get started. Thanks very much, guys, for filling it in. So today's goal is obviously to add value to you. We believe in sharing information freely. What we mean with that is that there's sometimes rumors that there's like a secret association of real estate agents that only share information with them. Yeah, it's not the case, and I think we should share this freely. And well, with that, add value to you guys. Some things that are good to know, and I'm going to pass it on immediately to you, Robin. Something about the NHG.
Yes. First off, it's important to know what NHG means. Well, the abbreviation is already explained, National Mortgage Guarantee. That's a free translation from Dutch, Nationale Hypotheekgarantie. What it essentially means is that it's a kind of an insurance arrangement. That means that let's say a worst case scenario happens, and again, bear in mind, this is not necessarily something I expect to happen, but this is why it was put in place. So let's say you buy a house for 300,000 euros. By this year, you're very happy, you live in the house, everything goes well, you have a nice job, and everything goes smoothly. But then the housing market drops. Again, that's not necessarily something that I expect, but let's say it will. And the property value drops from 300,000 euros to 270,000 euros. Now, that's not what you want, but you only are affected when you actually have to sell the house, right? So if the property value is lower and you don't sell, there's no problem. But let's say you have to sell. Why do you have to sell? Is because you cannot afford the mortgage anymore, because you got laid off your job, or you got disabled and you cannot do your job anymore, or maybe you bought a house together with a partner. If that partner passes away, for instance, well, all kind of horror scenarios, but let's say that happens. You cannot afford your mortgage anymore, and you have to sell the house, and you have a remaining debt. Because if you have a mortgage for 300,000 euros and the value then is 270,000 euros, then you have a remaining debt if you have to sell the house. Right now, usually before NHG came into play, this was just something that you had to deal with. You had to sell the house and you have a remaining debt, and then you just have to take time to repay that to the bank. This is where national mortgage guarantee comes in. If this happens, if this horror scenario happens, then NHG will step in and will say, okay, sure, you have a remaining debt, we will pay that for you. Now, they don't do that out of the kindness of their hearts only. There's a one-off buy-in, so only at the very start, just before when your mortgage starts, then you pay a 0.6% buy-in, if you will, in this guarantee arrangement. And this is 0.6% of the mortgage that you take out. Now, that is the kind of the insurance situation that is there. It is very nice. Again, if you need it, I don't necessarily expect it because you already repay on your mortgage. So the likelihood that you have a debt is one thing, and a massive drop in property value, I don't necessarily expect, but let's say that's why it's there. Now, this is one of the reasons, one of the perks there. Now, there is another benefit, because if I already say, well, it's very unlikely that you need it, then why would you use it, right? Now, there's a very good reason for that, because if you have a guarantee or an insurance, such as this one, then the bank, they go crazy on that. They very much like that. The less risk a bank has, the more happy they are with you as a future client. And specifically with NHG, they will give you a lower interest rate. So that's the primary benefit, and that lower interest rate can add up to about 0.4% lower in your interest rates. So let's say the interest rates are 4.7 right now, approximately, then your interest rate with NHG can be as low as 4.3 or 4.2, for instance. So it can be a significant difference right there. But there are some limits there and some conditions that you have to abide by. One I already mentioned, you have this buy-in of 0.6% of the mortgage amount that you take out, but there's also a cap of the property value that you can buy. That cap this year is 355,000 euros. Next year, there will be increased to 405,000 euros. What this means is if you buy a house for up to 405,000 euros, you can opt for this national mortgage guarantee. If you buy a house for 410,000 euros, you cannot take this mortgage guarantee at all, not to 405 and then the remaining amount without it. No, even if it's 405 and €1, you cannot use this national mortgage guarantee. So that's good to keep in mind when considering buying a house and doing this. Now, you don't necessarily have to cancel a bid when you put in a bid for 406. It's perfectly fine. Just don't have that benefit from the lower interest rate and the insurance situation. That is the downside of that. So that's basically what that means. So the cap is 405,000 euros in 2023. By the way, because we're very close to the end of the year already, if you buy a house now, so you do a visit, you put in a bid, you win, and then the transfer is next year. So even if it's the 2nd of January or the 1st of January, really, then we can already use that. We can start the application right now and use the new figures for 2023, as long as the transfer is in the new year. or in the new year. I don't know which way you want to use that. So that's basically it. 405 is the new limit for the national mortgage guarantee in 2023.
Perfect. Thank you very much, Robin. And just to clarify, would that cap then be for the house value or the mortgage amount? Or
The
for
house
the
value.
price, or
Yeah, so it's about the house value, usually, or yeah, so or what you buy it for. That's usually pretty close together, but it's not about the mortgage. So if you buy a house for 450,000 euros and you decide to put in 50,000 euros of your own and say, well, yeah, but now the mortgage is 400,000 euros, you cannot use it because the value is more than that. Yeah.
Okay.
Good question.
Thanks for clarifying. Alrighty, cool. Let's move on to the other thing that is good to know. So currently we have transfer tax in the Netherlands. What transfer tax is, generally speaking, it's the tax you pay when ownership of a property is transferred from one person to another, from a seller to a buyer. The state likes to take a little bit of a percentage there. Typically, it is 2%. That's also what you hear always, the 2% transfer tax. Now, there are some other rates. There's a rate that is 8% when you're looking just to invest. Then you are paying directly 8% transfer tax. There are also some other amounts that I will talk about here. But first, let's look in the middle example. So we have 3 examples here. Let's look at the middle example. Here, Kate is 37 and John is 33. So Kate 37, John is 33, and their property is 400,000 euros. In this case, Kate pays 2% on her property share, John pays 0% on his property share. We're just going to assume that both of them are going to be owner of the property for 50%. Now, what we see here is that in total, they're going to be paying 2% transfer tax. This is because, oh, sorry, I'm saying it incorrectly, actually. We should be looking on the right example here, because that's going to make it a little bit easier for the middle one in the later. Sorry, my bad. So both of them are over 35 years old on the right side. So let's say Kate and John are both 37. Their property is 400,000 or more, in this case 500. Now, in this example, both of them are going to be paying 2% over their property share. So in totality, 2% over 500,000 euros. This is because both of them are over 35 years old. Both of the purchase price is over 400,000, and they're purchasing the property for the first time. Then the property tax is 2% over their transfer. Then we also have so what we learn from this is that you have to be over 35, over 400K, then you are always paying 2% transfer tax over the property. Now, you guys might have heard, and that's what I mentioned before when we were doing the poll, that if you're between 24 or actually up until 35, then you can be exempt from paying the transfer tax. Now, there are some requirements that you have to meet there. First of all, what I just mentioned, you have to be under 35 years old. The property purchase price cannot be over 400,000 euros, or actually 399,999. So when it meets 400, then you fall in the other bracket. And you have to be using the transfer tax exemption for the first time. So in this case, if we look completely at the left, we have Kate and John both under 35 years old. The purchase price is 400K or less. And because of this, and they're using the transfer tax exemption for the first time, the transfer tax is 0%. So we have the two sides, either paying 0% or you're paying 2%. Now we have the funny exemption, and that's the one that I started with, but that's the middle example. And that is where Kate is actually over 35 and John, in this case, is under 35. Assuming that they're both going to be owner for 50% of the property, then Kate is paying 2% on her property share and John is paying 0% on his property share. And therefore, we actually have a transfer tax of 1%. We don't see it a lot, but yes, this does exist. So you pay per your ownership percentage, so to say. So if you are turning 35 next year, then it is smart to quickly purchase a home before that, because it can save you a lot of money. Over a property price of 400,000 euros, it's 8,000 euros that you don't have to spend on the tax authorities. So I would recommend moving quicker than slower. What is good to mention here is that just like the NHG, the transfer tax threshold is also going up next year. It's moving from 400,000 to 440,000. Well, we still have it mentioned as 400 here because we have some exemptions where if you buy a property now, you already have to transfer before the end of this year. But if you buy a house now or sign a purchase agreement now, but only have to transfer, like Robin mentioned, on the 1st or the 2nd of January, then immediately the new rules kick into play, and therefore the threshold will be 440. So feel free to make an offer of 430, 435, 439.5. Even then, if you have to transfer next year, then you can still use the transfer tax exemption. Now, if you want to check out specifically how your situation looks, we have a visit the transfer tax checker down below button. Tomorrow, everyone will receive the slides and the recording. Feel free to press on it. You'll go directly to a calculator and you can fill in your specific situation to see what you can expect from the transfer tax amount. I hope that covered a little bit what transfer tax looks like. Let's see where you guys are in the process. So I'll start up one more poll. If this is, if you're just in the experimenting phase or seeing where you are researching, have you had a chat with an agent yet? Have you spoken with a mortgage advisor already? Again, giving you guys a few seconds to fill this in. I saw a mention coming in from one of the people in the audience saying, hey, has the transfer tax not been increased to 440? You were quicker than I was. Yes, indeed. All right. So let's see. The majority of the people are still in the researching phase. Makes sense. That's why you're here, right? And again, the majority has not spoken with an agent yet. That's it. That's always good. Perfect. Cool. Moving on. So let's see what the difference is actually between renting and buying. Maybe a little bit strange why we're talking about renting in a buying webinar. What's going to get stranger because in this slide we would say why you should actually rent. Well, there are a few things, and there are pros and cons. The pros of renting a home, you have a lot of flexibility, right? I mean, 9 out of 10 times with a Model A contract, you have a 1 month's notice period. So if all of a sudden, especially assuming that the majority here are expats, if you decide that you want to go on an adventure in a different country or anything like that, and it's a lot easier to just say, hey, I want to cancel the rental agreement. And within 1 month, you pretty much have cut all your ties with the property. So that gives you a lot of flexibility. Now, there aren't any taxes or maintenance. I do have to say the garbage tax is always for the property user, so that would also be for a tenant, but the rest of the taxes like sewage tax, water tax, the property or real estate tax, that is all for the homeowner and therefore not for the tenant. Plus any big maintenance like the window frames, chimneys, sewage, well, the roofs, things that can be quite costly. This is also all for the homeowner or for the landlord. So yeah, all that money you can keep in your pockets, which is rather nice. Now, these correlate directly with the cons of owning a home. Again, the taxes that I just mentioned, maintenance is quite expensive, especially if you have a rather large house. Painting the outside exterior of your home can quickly be around 8,000 or 12,000 euros. And this is a big one. It's much harder to move, right? So if you do decide that you want to go on a different adventure or well, anything else pops up in your life, then you first have to sell your property before you can actually cut your ties with the property. And well, you might have heard in the news, it's becoming more and more difficult currently to sell a property. So it's not a bad idea to hold on to your rental if you have no place to go. Unless, again, as you guys mentioned, want to settle for a longer time, then I would always advise to actually buy a property, but touch base on that a little bit later. We hope that you guys are still interested in buying a home because there are a lot of pros on actually owning a property. First of all, stability, right? So in times of crisis, like an energy crisis or any the things that are going on in Ukraine and Russia right now, there is a little bit of chaos going on in the world, and it's nice that at least your home is a stable place and something that you don't, as long as you keep paying your mortgage payments, you don't have to leave the property. Whereas if you're renting a home, a landlord at the end of the rental agreement can say, well, guys, I've now decided to sell, or I want to move it back in myself. And then they can pretty much just kick you out, also with the 1 month's notice. When owning a home, that is not the case, luckily. The monthly payments that you pay, they also build up equity. Of course, it's partially interest, but there's also a big part that you're actually paying back to the bank, and therefore you can see it as putting back into your bricks and building up equity. So if you start out with a loan of 100K, after a few years, you've paid back 10,000 euros, sell it again at 100K, hopefully assuming that the market stays the same, then you've built up an equity of 10,000 euros that you can use towards your next purchase or for anything really. When renting, and that we'll touch base on that in the column below, but you're pretty much paying off someone else's mortgage, right? So you're not building up equity there. Currently, there's also a mortgage interest deduction scheme. That means that at the end of the year, when you're doing your yearly income taxes or tax return, then you can actually also get a mortgage interest deduction. So even though you're paying interest every month, at the end of the year, you will get some back from that as well. So rather interesting, making money a little bit cheaper because of that as well. Well, the cons of renting a home, the rents will keep on rising. As you might have seen as well, is that it's very, very difficult currently to actually find a rental property. They are overbidding on rental properties now as well, which is just insane in my opinion. But yeah, as long as the demand is still much higher than the offer, then the rents will keep on rising. There are no tax benefits, right? I mean, there are no specific schemes to make renting more attractive. And as I just mentioned, there's no creation of wealth. You're paying off someone else's mortgage. It's money down the drain pretty much. At least for you. For the landlords, it's another conversation. Maybe from a financial perspective, Robin, can you tell us the difference between renting versus buying?
For sure, definitely. So this is an example of what renting versus buying would look like. On the top one, there are two similar properties. Let me start there. Similar square meters, a similar finish to the property. But the top one has been sold, and the bottom one has been rented out. Now, this overview has been set up, I think, 2-3 months ago. So the interest rates were a bit lower than they currently are at 4%, but it's just an example right here. So you can see when you buy the house, the duration of your mortgage is regularly 30 years. And then your monthly payment for your mortgage is 2,363 euros. That's the gross monthly payments. Why I'm saying that is what Ludo just mentioned, that you have a tax benefit in your mortgage. You have a tax benefit over the interest that you've paid over the course of the 1 month or a full year. You can decide how you want to do that. Now you can see the tax payment for the first month is 1,650 euros. So this is where you get the tax benefit over. Now, what you can see here is money down the drain is rent and paying rent, essentially. You don't get anything back from it. Paying mortgage, you do get something back because, as Ludo mentioned, you put money in your bricks. When you sell it, you get that money back when you get a similar selling price. Now, from this mortgage payment, you can see that 1,650 euros goes to interest payments. So that's essentially also money down the drain. So when you compare renting versus buying, then it actually would make most sense to compare the interest payments versus the rental payments. Now, when you look at that, still the interest rates would have to go very, very high, up to 10-15%, which they are very unlikely to go, especially in the next coming 5-10 years, I think. Only then it would start making more sense to rent instead of buy, because you spend more money on the interest payments. Now, when you buy a property, you do have some investment costs, some buyer's fees. It's also known as, a bit later on in the presentation, Ludo will specify exactly what you can expect there. When you buy a house of approximately, say, I think this was listed for 525, depending on your personal situation, of course, and what people you work with, but on average, the investment that you would have to do, the financing costs, are approximately 18 to 20,000 euros. So that's the investment that you would have to do to get things started to own this property. This does not include any down payment on the mortgage, because you don't necessarily have to do that. In the Netherlands, you can finance up to 100% of the value of the property. So this is only the financing and purchasing costs. Now, of course, they will want to know, how quickly do I get that money back? Because then you can compare, okay, from what moment does it really start making sense to buy a house instead of to rent a property? Now, you can already see that a break-even point is at 22 months. So let's say it's 2 years to earn back that investment that you did when you look at the comparison of renting and buying a property. In that comparison, it's been based on solely on the monthly payments, not the interest payments, but full monthly payment of buying a property. Now, when you compare that to what happens after 5 years, when you buy a house, the total of the monthly payments, excluding the tax benefit, which is substantial, but excluding that, so then you pay 141,780 euros over a course of 5 years. It sounds like a lot of money, because it is, but a large amount is also repaying on the mortgage, and that's what you build up in equity. So this means that this repayment of the mortgage, this turns into equity, what means that if you sell the house, you get this money back. So you build up 50,000 euros if you pay a mortgage of 141,000 euros over 5 years. When you compare that to renting a property, then you can see that you spend 180,000 euros over the course of 5 years, and you don't build up anything. You didn't save up anything. So it means you don't get anything back from this 180,000 euros. So when you compare this, then buying makes more sense than renting. Now, this is quite a cold financial comparison, of course, and I just mentioned after 2 years it starts making sense to buy a house, then it starts making sense. It really it's more it starts making more sense even when you buy a house for 3, 4, 5 years. So for a bit of a longer time future, if you plan to stay in the house in the Netherlands for exactly 2 years, then renting might make more sense, but it's very much subjective to your specific situation. So by all means, don't base your decision only on this overview. Have a chat with somebody that can tell you everything about your specific situation, so you know what's going on and what you can expect.
Perfect. Thank you very much. Cool. All right. Let's look at some market drivers. Even though there has been some talk about prices decreasing the last few months, if you compare it to the last few years, prices have increased drastically. So I think it's good to understand what has caused the prices to increase. Well, there are a few factors. First of all, quite a lot of fiscal benefits currently in play. Obviously, the transfer tax exemption that we talked about. So if you're buying under 400K, you're under 35 years old and you are going to use this exemption for the first time, you don't have to pay that 2% transfer tax. And as I mentioned, over 400K, that's already 8,000 euros that you can put in your pocket or use for your furniture, whatever. So that is a big exemption. We have the interest rebate or the mortgage interest deduction at the end of the year. Again, making it a little bit cheaper to actually borrow money from the bank. And there's currently no capital gains in the Netherlands. That means that if you sell your property, and with the example that we saw before that Robin was just talking about, where you build up equity of 500 or 50,000, you don't have to pay any taxes over that either. So yeah, everything can directly go into your pocket. Currently, there is still a tax-free parent donation. In the Netherlands, we call it a parent donation because yeah, your parents have to live in the Netherlands for it to be yeah, the tax-free parent donation, so to say. This is where a family member can actually donate 100,000 euros towards a purchase of a property or gift it to you without having to pay any taxes. It does have to be used towards a purchase of a property. Currently, until the 31st of December this year, that is still 100,000 euros. Next year, it will hover around 30,000 euros. And starting from 2024, this will be gone. Good to mention here, though, that this is if your parents or your family members live in the Netherlands. If you have a wealthy family member living outside of the Netherlands that wants to help you with the purchase of a property, they are more than welcome to yeah, pass that money on to the Netherlands. It doesn't have to be 100,000 euros, can even be more, and that is all going to be tax-free as well. A very interesting scheme to think about if you do want to purchase something and you have some family members that are willing to help you there. Now, the interest rates, they are rising, but they still are on the so-called lower side. It might not feel like that, but if you compare it to 8 or 10 years ago, then we're back at the normal level, really. To be honest, the 1.5%, Robin can maybe explain this better, but the 1 or 1.5%, that wasn't really the normal. That was just a very, very low amount. And I think we're now going to go back a bit more towards what the normal amount should be. Obviously, they're still rising, but we're definitely not at a 10 or 15%. So it's typically speaking still rather on the lower side. Robin.
Yeah, Ludo, thanks. You mentioned they're rising. Actually, they are coming to a bit of an equilibrium, kind of a standstill right now. If anything, they lowered this week a bit by 0.1%. It's not a lot. But what we can see happening indeed, we saw a quite steep increase start of the year, and now it's kind of leveling out. And indeed, when you look at the last 10, 15 years, this interest rates make significantly more sense financially. Sure, your monthly payments look like they are higher, but because the interest rates rate are higher, that means that you pay a larger amount of interest, which makes perfect sense. But then you also have a tax benefit over the interest. So even if your interest rate changes by a percentage, your net monthly payments, so including this tax benefit that you have, are pretty much the same still. So that's just to kind of, it isn't all that bad, really. That's what I'm trying to say here. And also when you look at interest rates for your mortgage, sure, they went up in time, and banks take some time to do that, but gradually then the savings interest rate, so the credit interest rate that you will get on your savings account, will also start increasing a bit. So that's where there's a bit more of a balance, whereas last year you had to pay for the savings to put them on your bank account. So that was a bit of a crazy situation there as well. So just saying, the balance is looking to be back in play, and the interest rates are leveling out.
Well, that's good to hear. That's nice. Cool, thanks. Well, obviously the rents have been very high, so that's has increased the majority of people moving towards a purchase home. That correlates with the next point as well, and that's the lack of supply, or in other words, the high demand. There are so many people looking for property currently, and there's just not enough properties available that that is driving up the price, and it still is. What we saw the last 3 months, prices on average in the Netherlands have gone down by 0.5% per month. So it's not a huge amount, plus the amount of properties that have been sold in the last 3 months are very, very low as well. So it's difficult to compare with the beginning of this year. However, there is a slight decrease there, but I want to emphasize that that is over the general country, and not just specifically, for example, Amsterdam, because in Amsterdam prices have still been increasing, especially as the lack of supply is a very big thing here. Everyone wants to live within the city ring, and it's just impossible to build any extra buildings here. So, but in general, these things have caused the prices to increase over the last couple of years. Then we talked about this a little bit earlier, the 18,000 that you mentioned, Robin, the closing fees, the purchase fees. There are a few names for it. In general, it just means what you need in savings before you actually start the purchase, and what can you expect to pay for the purchase of a property. As buying a home itself is not free either. Maybe good to mention again, the bank will cover 100% of the property value. In the past, and we're talking 30 years ago or so, the bank would actually do 105, meaning that you can get some extra cash for the closing fees. Unfortunately, not the case anymore. Let's go over them. So to start off with, the transfer tax, typically speaking, 2% of the purchase price. However, again, mentioned here, not for new builds, not for people under 35 that are looking for a property under 400K and that are benefiting from the exemption for the first time. Then it would be 0%. But let's assume that it's 2%. Then you will need to go to the notary. In Amsterdam, besides the mortgage deed and the transfer deed, the notary actually also drafts up the purchase agreement, so it can be a little bit more expensive. But generally speaking, around 1,100 euros, let's say between nowadays 800 to 1,100 euros per deed. And then the purchase agreement is a little bit cheaper, more around 500 euros. If you would like some advice, then a bank or mortgage broker typically charges around 1,500 to 3,400 euros. Typical real estate agent, 1 to 2% of the purchase price. Again, EHN fixes a charge fee. We'll touch base on that later. An appraiser is necessary if you would like to get a mortgage. An appraiser is someone that comes in to officially evaluate the home. They charge between 700 to 900 euros. Technical inspector, well, the word says it already, someone that will technically inspect the property and make sure that everything is as we expect it to be, 439 euros. If you don't master the Dutch language, then you are obligated to have an interpreter present during the signing of the transfer and the mortgage deed. Funny enough, even though all the notaries, they speak perfect English, for it to have a legal power or legal authenticity, the meeting has to happen in Dutch or in Frisian, funny enough. Yeah, everything needs to happen in Dutch. So if you don't speak Dutch, then we need to have an interpreter there. I would always go, if you master the English language, just go for an English one, as typically they're a little bit cheaper than the more difficult to find interpreters. If you are going to be making the deposit via the bank, then the bank charges you for the bank guarantee. This is 250 euros or around 1% of the guaranteed amount. If you do decide to make the deposit of 10% from own savings, then there's no additional cost for it. If you want to make use of the NHG, the National Mortgage Guarantee, they will charge you a one-time fee of 0.6% to make use of the insurance and cheaper interest rates. Now we have a third column with the tax deductible and a question mark. As you see, everything that is related to mortgage is actually tax deductible. So this is the mortgage deed, the bank or the mortgage advisor, the appraiser, and the NHG. Now, if the bank obligates you to actually do a technical inspection because they need another extra documents to see if the property is actually in a good state, then if the bank obligates you to do so, the technical inspection is also tax deductible. I hope that my costs will at one day also become tax deductible, but as of now, that is unfortunately not the case. But I've been keeping my fingers crossed for the last 2 years. So let's see what happens. Then this is rather valuable as well. Let's give you some tips to actually win in the current market. Very important one. Value. Well, let's move ahead directly to an example. So we have a property here. The asking price is 395,000 euros. Nice property listed by Uijtdehaage. And they have decided, well, we are going to list the property at 395,000 euros. Actually, unfortunately, the 395,000 euros doesn't say so much about the value. Because what we see here, and I'll move ahead right here, asking price 395. I, as a buying agent, have done a price research before we make an offer. So you, as a client, will tell me, Ludo, I love the house. We want to make an offer. Can you tell me what we need to bid? Then I will do a price research. This is a research that's based on comparable properties, based on certain factors. We'll look at the price per square meters, multiply it with the amount of square meters that we want to buy, and we come up with a market value. Well, in this case, market value is 415,000 euros, but the market is still a little bit competitive. There are other people that are also interested. So to actually purchase the home, we need to use 20,000 euros out of own pocket to have the highest and most interesting bid. So the purchase price in this case is 435,000 euros. Now it seems like the overbid was 10% over 395,000 euros. But I don't like to use this as an overbid because Uijtdehaage, the listing agency, they can literally put the asking price at the amount that they wish or they find suitable. So they can also put it at 300 or at 100 or at €1. Then obviously this overbid percentage is going to differ dramatically. So when I talk about overbidding, I only talk about overbidding over market value, and that is in this case 4.8%. Still 4.8%, but it's definitely a lot less than 10%. Now, if the property was taken under the wings of a different real estate agency, the asking price might have been 375. Then still the market value based on my price research is 415,000 euros. Still, to purchase the property, we have to offer 435,000 euros. Then all of a sudden, the asking price that we, or the overbids that we see a lot, well, in the newspapers and that kind of stuff, all of a sudden becomes 16%. But actually still the overbid was only in brackets, obviously 4.8%. So really when we talk about overbidding, I really need to know the market value, because otherwise I cannot tell you typically have to overbid 10% or 20% or 5%, because the asking price doesn't say too much. So what I always say, if you have a budget, let's say of up to 435,000 euros, don't look much higher than 375 or 395, because you will need to add a little bit to actually reach the market value. And then when we know the market value, we disregard the asking price and we merely look at, well, what can the bank give us? In this case, 450,000 euros. How much do we have in savings? How much do we like the property? How much are we willing to put up towards the property to purchase it? And based on that, we can come up with an overbid. Clearly, with using those calculations, come up with a good, good calculation, really. So that's why it's very important to know market value. The appraiser will come in as well to know what the market value is, to confirm that this is what we can get from the bank. But I have to say 99.5% of the time, my price research is exactly the same as the appraisers, but the appraiser is going to draft up a beautiful report, and well, the bank doesn't accept my Excel, unfortunately. Cool. What does a winning offer look like? Well, funny enough, a winning offer doesn't always mean that it's the highest price. It means offering a good price. Maybe it's good to go back to the example that we had here. So if we know that the market value is 415, we can obviously make an offer at 500,000. Most likely we will win the offer, or at least have the highest price. But if we say in the offer, we also need a mortgage of 500,000, yeah, the bank is never going to give us that, because the market value is 415. So even though we had the highest bid, the sellers will not move forward with us, because they can say, yeah, but the bank will never give you 500,000. So it's offering a good price, potentially with saying, well, we need a mortgage of 415, but we're willing to use 20,000 euros out of our own pocket to come up with the 435. So that is offering a good price. That correlates immediately with what I just mentioned about differentiating the amount that you need from a mortgage and the amount that you can put up from your own pocket. In other words, offering security to the seller. If you say that you do not 100% rely on a mortgage provider or a third party to arrange your financing, this will offer a little bit more security to the sellers. We don't assume you to put up 100% of the purchase price out of own pocket, but if you can say again, hey, 415 from a mortgage, and we'll add 20,000 euros out of own pocket, you are offering a little bit more security, also by saying, hey, I did my research. Then the third one, well, it's one that we have mentioned here, but in the current market, and especially in regions like Amsterdam or Utrecht or Haarlem, where the properties are quite old, I don't mind adding a little bit hassle, to be honest, to the offer, because it's good to do your proper due diligence. But what we mean with this is, for example, taking out the technical inspection, so that the purchase agreement can be signed very quickly. But again, for example, in Amsterdam, we have properties that were built in 1605, for example. Yeah, you want to make sure that the walls are going to be standing in the next 5 or 10 years. You want to make sure that there aren't any structural cracks or anything like that. So it's good to have a technical inspector come in. And to be honest, in these kinds of areas, selling agents also understand if we do that. So there's not a huge hassle there. Then the fourth point, and that's something that has become quite important, or more important in the last couple of years, is offering a personal touch to the offer. So that is just adding a biography of who you are, why you like the house, what kind of work you do, that kind of stuff, because a lot of sellers, especially ones that have lived in a property for a long time, they also want to pass on the property to someone that's going to start a new life there, really enjoy it, and not just use it for an investment or anything like that. Plus, they might have a very good connection with their neighbors, and they also want to make sure that, well, the new homeowner is going to be a nice neighbor for their neighbors as well. So this can definitely, if you have if you're competing with an investor who's offering exactly the same, then a lot of times the sellers will actually move forward with you because they know that you are going to actually be enjoying the house instead of just making a quick buck on it. Then the third one, the due diligence. Before we move forward, we have a technical inspector and appraiser that I talked about before. What do you guys think? Do you book them before or after the offer is accepted? I almost gave the answer before, but I stopped myself to do so. But just pop it in the chat. Do you guys think we'll have the appraisers and the technical inspector come in before or after we have the offer accepted? I'll give you guys a few seconds again to put that in the chat. I see a before coming in, some more befores. We have an after as well. So I think that the majority is saying before, but we also have some afters. Well, I won't hold you guys' attention much longer. Actually, it is not before, but it is right after the offer is accepted. And the sweet spot would be right here, a few days after the offer is accepted. Well, why is that the case? Because as we saw before, unfortunately, the technical inspector and the appraiser, they don't work for free. And in a competitive market, an offer might not be immediately accepted. We might need to make 2, 3, sometimes even 4 offers before we can actually get the dream house accepted or the dream offer accepted. Well, that means that you'll have to pay the appraiser and the technical inspector 2, 3, 4 times as well. So, and they're not very cheap, so we want to keep that money again in our pockets. So that is why I will obviously do due diligence. I will make sure that the market value is in line with expectations. I will check all the property documents to make sure that the property is in a state that we accept. And then we make the offer. Now, it takes between 1 and 2 weeks to actually sign the purchase agreement. And funny thing, in the Netherlands, the deal is not legally binding up until the moment we sign the purchase agreement. So in this 1.5 weeks, this is the time to do due diligence, and to have the appraiser come in, write a report, and communicate the actual value, and also have the technical inspector come in, draft up the report with the costs that are attached to it, so we know we know exactly what we're buying. If something arises within this week, like the technical inspector says, well, hold up, you guys, the roof is in such a bad condition, you need to fix it, and that's going to be 20,000 euros. If we don't have that money laying around, or we just don't want to deal with that hassle, fair enough, then we can still pull out of the deal without any financial consequences, because the contract is only binding from the moment that we sign the purchase agreement. Now, we as a buyer, we have 3 additional days to actually wake up and think, oh my God, what did we do? Pull out of the contract again without any consequences. This is the 3-day cooling off period. The sellers don't have this. As buyers, we have an additional reflection period to really make sure that we are all aligned and sure of what we're doing. Cool. Well, to give a general timeline of the buying process itself, we'll obviously start on the left side at start. Now, there's not a lot of space in between here, but actually there a lot happens. We'll start, you'll find properties on Funda primarily, see properties that you like. We'll go to viewings. We'll see what you do like, what you don't like. Typically takes 2, 3, 4 viewings to actually know, what you specifically look in or looking for in a property. Then you tell me, Ludo, we need this house, drop everything that you're doing. That's my cue to do the research, what I just talked about, price research, property document review. That all, again, still happens over here. Be in contact with the selling agent, be in the negotiation phase there, see what kind of offers he or she has in. And then from there on, we actually submit our final offer. That happens here. It's a few hours of sitting around like this, hoping to get some good news. Well, assuming that we do get good news, we move on to the next part, and that is what was mentioned in the previous slide. That is this part. This is where we have the appraiser and the technical inspector come in. If everything is okay and still as we expect it to be, we'll sign the purchase agreement. Again, this is where you have now officially said, okay, the buyer is going to buy, and the seller has also mentioned that they are officially going to sell. This is where you, together with Robin, will start the mortgage application. Preferably everything is already aligned here, and you have your salary slips in. I'm just gonna make sure that everything is okay for you, Robin. The salary slips are in, the employer statements, and all of that. So that when we do sign the purchase agreements, that Robin can immediately go to the banks and say, hey guys, let's get started. We need a mortgage. This typically, well, we mentioned here, it takes 4 weeks, but I know that Robin can do it a lot quicker, sometimes even in 1 or 2 weeks actually. So that's very nice. But let's say we need 4 weeks, fine. Then at one point we'll have the mortgage application approved. Another moment for you guys to open a bottle of champagne and have a party moment, because this, well, after this, not a lot can go wrong anymore. Financing is in order, property is in order. Then we just wait for the actual transfer to happen. That is at the orange circle right here. Around a week or 2 weeks before, we get the statement of completion, just a fancy word for final invoice. This final invoice has all the costs on it that are made for the purchase. So think of obviously purchase price, but also transfer tax and the municipal taxes that still need to be paid. My invoice will be on there. Robin's invoice will be on there. And then, well, you pay to the notary, and the notary pays everyone accordingly. So that makes your life a lot easier again as well. Then when it's actually the transfer date, we'll first go to the property to just make sure that all the walls are still standing and everything as we expected and agreed upon. If that is the case, we'll go to the notary, we'll sign the transfer deed. This is where ownership is transferred from the seller to the buyer. We'll sign the mortgage deeds. This is where you say, okay, I'm officially in debt with the bank. And then you will get the keys, and then again, official moment to well, have a party, have a housewarming, and arrange the move and everything. Then you still have around 2 months liability term. Well, the 2 months is a bit of a stretch in my opinion. I always say to my clients, use the house very extensively in the first 2 weeks. Open all the windows, open all the heaters, that kind of stuff, to make sure that everything is still working as agreed upon, because within this time period, we can still go back to the sellers and hold them liable for these kinds of things. After 2 months, yeah, we don't hold a chance in any negotiation there. That is a bit the timeline. Cool. Well, let's move forward with some frequently asked questions. We always get a bunch of questions, and feel free, this is also your moment to pop anything in the Q&A, but we'll go over some questions that we get asked frequently. And if there's anything after that, we'll answer them live as well. So question number 1, and this one is for you, Robin. Is it actually possible to get a mortgage with a temporary contract or as a freelancer?
Short and sweet, yes. To give you a bit more background, let's start with the temporary contracts. Banks like security, as previously mentioned, and they would like to know that you can not only pay for the mortgage today, but for the next 30 years, because that's the regular duration of a mortgage. They want to know, is it very likely that you can pay that? Now, you don't have to stay at your same job for the next 30 years. But when you have a temporary contract, there's a chance that after your term of, let's say, a year, that your company says, okay, that's been it, and that's it. So when you do have a temporary contract, we can use your income, but then not to the full extent. But there's a way around that. When we apply for a mortgage, you need something called an employer statement. That's a confirmation from your employer that states, well, hey, this lovely person works for us. This is their information, this is our information, and this is the contract that this person has and the income. But there's one additional part that they can fill out. And what it is a declaration of intent, or a employment continuation statement, it's also known as. Essentially what that means, it's a little box they can select, and with that they say, we are very happy with how this person does their job, and we have the intention to keep them on after the contract term ends. It's an intention. It doesn't mean anything for your employer, because it's not legally binding. You cannot, if you would get laid off, you cannot go to court and say, well, hey, but they signed this little check thingy. It's just a confirmation for the bank that your employer expects you to keep you on, and therefore we can use your entire income for the mortgage purpose. Usually, pretty much all employers do this. True, there are some specific situations, for instance, when you're a PhD student, or when you have a specific situation that you have a temporary contract and there is something else going on. So by all means, let me know, because there are ways around to use that. As long as the bank can know, okay, it makes sense that this person has this income for a longer stretch of time, then they're good. So that's when it comes to a temporary contract. So yes, there are definitely possibilities. When you're a freelancer, you're self-employed, or when you have a company, a BV, for instance, or whatever way, you can also close a mortgage, but it's not really as black and white as when you would close a mortgage based on your income as an employee. Because when you're a freelancer and you're a company owner, we have to look at your the results of your income over the last 3 years, preferably. When you look up on the internet, which need, it will also say 3 years, but it's not necessarily the case. It's a bit more of a gray area, and also more subject to our explanation to the bank as well. Now, any bank will always require you to have at least 12 months. So you need at least 12 months of history of your company here in the Netherlands. So you have to be registered at the Chamber of Commerce right here. So that's 12 months. And from that moment on, then we can use your income. Not to the full extent, but that gradually gets up more as you come close to this full 3 years. So there's definitely possibilities. And even if you have, for instance, and this is maybe a situation that when you're a freelancer and just started here in the Netherlands, might apply to you. When you moved your company from abroad to the Netherlands and you continue here, then we still need 12 months of history of your employment here, of your self-employment here. But under some conditions, we can use your history of your results of your company from abroad as well. So we can make the situation a bit more substantial for the bank, because in the end, you continue your company here in the Netherlands. You already have results, a history of your self-employment in another country. So there are definitely possibilities. Just make sure, if you have any specific questions about this, just give us a call and we'll discuss exactly what that means for you. So yeah, short, again, there are possibilities. Just be well informed when you make any choice there.
Cool, thank you. Moving on, what will happen if you want to leave the country after several years? Well, a fair question, again, especially as we're talking to a lot of expats. A few things can happen, right? First of all, rather easy, you keep your home, but you also keep your mortgage costs. So if you want to come back a few times a year here and you want to use that property, then you can just use that house, keep it, and you still have your mortgage costs. You will obviously also still have your municipal taxes and that kind of stuff. You will just still be registered here as a homeowner. Now, the second part correlates a little bit with the first one. If you want to keep your home, but also want to make some money on it, you can actually rent out your home. Good to keep in mind, though, that you do need permission from the bank to do so. As if you get a mortgage to live in the property, you get a so-called residential mortgage. If you want to change that into a buy-to-let mortgage, there are some requirements that you have to meet. Plus, interest rates are a little bit higher. So it's good to have a chat with your bank about this. Plus, in the mortgage deeds that you sign, it specifically mentions that you need to get permission from the bank to actually rent out the property, as a property with tenants in it is worth less than a free or an empty property. So the bank would like to keep a little bit more control over that. And then the third option is just selling your house and moving on. And then there are no penalties or capital gain taxes there as well. So this is can be an interesting one as well if you need the money for potential new property in the country that you're going to be moving towards. Cool. Well, a question that also correlates with what we just mentioned: is it actually possible to rent out your house or part of your house? Maybe I'll start with the first part, and then
sure. Go ahead.
You can help me out with the rest. So a quick answer is yes, it is possible, right? If the bank gives you permission and you change your mortgage to a buy-to-let, then yes, it is possible to rent out your house. rather easily said. Banks are a little bit hesitant though, so it's easier said than done, but it is possible. Now, renting out a room is also possible. It's even a little bit easier because typically you don't need permission from the bank to do so. However, we do always advise you to have a very good agreement with your tenant or with the person that is in your house, because there are very strong tenant rights in the Netherlands. And if a tenant has lived in a property for over a year, they automatically receive these tenant rights, and then it's very difficult to actually kick them out of the house. So if after 2-3 years you decide, okay, I'm moving on to a next adventure, selling my property, and your tenant is being difficult and saying, well, you can't kick me out, then yeah, legally saying you indeed can't kick him out. So have a good agreement with him or her, and have a so-called eviction clause where you state, okay, if I want to sell my property, I'm going to give you 2 months to leave, and then you just have to leave. And if they sign that, then it's fine. Good to know though, if you rent out your whole house, then it falls into the so-called box 3, and therefore you pay no taxes over the income that you get from the house. If you rent out a room, then it's not seen as non-taxable income, so then you do have to pay tax over that. Do you want to add anything, Robin?
No, that's pretty much it. There's one thing to know, indeed, what you already mentioned, this renting out a room, you do need an eviction note. Also, the bank requires you to have that, because if you call the bank and say, well, hey, I want to rent out a room, they will say no. And the reason why they do that is because they are kind of hesitant, because they, when you rent out part of your house, they have rights. If you didn't include this eviction note, then if you don't pay your mortgage, the bank wants to sell your house, and they cannot, because there's somebody living in there. So basically, that's the most important thing, renting out your house. Most important thing is indeed that you have to refinance your mortgage. Interest rates will be a bit higher, true, and sometimes you have to do an additional down payment, because you cannot secure a mortgage of the 100% of the value, but give or take 70% usually of the property value. So maybe you're already there because you repaid your mortgage already to that extent, or maybe you have to do a bit of an additional down payment there. So it kind of depends. But again, here goes the same thing. If you want to rent out your house, so renting out a room isn't necessarily that complicated. Just make sure that everything is administratively well taken care of. Renting out a house, just make sure that you do that for the right reasons, because it sounds nice that you have that rental income, passive income for the longer term, but usually you do have to make there's the cat, by the way, that you mentioned, very good. So usually you do have to consider that you have to input quite a sum of money to get things done. And then it might make more sense to sell the house, get the profit that you make from it, and use that as an investment. It can be that you have a better yield from that as well. But again, this really depends on your situation. Both is possible. Both don't necessarily have to be too complicated.
Nice, thank you for that addition, Robin. Okay, then the 10% deposit. Well, I touched base on it a little bit earlier. See, we have the little monster coming in. But when you're signing a purchase agreement, then there is an article in there that states that you have to make a 10% deposit. Now, the reason for that being in there is just to give a buyer the incentive to actually fulfill his or her obligations that are mentioned in the contract. Why is this in there? Because if the sellers go into an agreement with you, up until the moment that the transfer deed is signed, they really don't have anything, and their properties off the market as well. So they're in a situation where they really kind of have to trust the buyer that they're actually going to move forward with this. Obviously, they have a legal agreement, but still, if the buyer decides to drop everything, move to Panama, and then the sellers are still stuck with the house. A few months have passed, and it's just a not so nice situation. So that's why at one point this 10% deposit was introduced in the contract to make sure that the buyers actually have an incentive to move forward with the agreement as well, besides the obvious legal stuff. Now, this 10% deposit, this is typically paid 1 week after the mortgage application is approved. So if we have a financial clause or mortgage clause in there that states, well, we need 4 weeks to get our mortgage approved, then the deposit is always 1 week after that. So in this case, 5 weeks. So that would be right around here. Yeah, that is what the 10% deposit is. Now you can do two things: either have or pay this 10% out of own pocket, but it is very typical that, well, if you're buying a house of 500,000, that you just don't just have a 50K laying around that you can spare for a few months. So what you can also do is actually ask the bank to make the deposit on your behalf, so to say. This is by furnishing a written bank guarantee, where the bank says, well, we guarantee that if a buyer fails to fulfill his obligations, then they will automatically receive or fall in debt with us for 50,000 euros, and we will use the 10% or the 50,000 euros to pay off the purchase agreement, so to say. Now, like I said before, the bank doesn't do anything for free, so they'll typically charge you around 250 euros or about 1% of the guaranteed amount. So those are the two options. Then our fees. Well, that's also an important one, of course. I think I will start. So at Expat Housing Network, like I mentioned, we don't work on commission. We just have a fixed fee. We have 3 packages to choose from. Well, to make it a little bit easier, especially in this webinar, just 2 packages: the Smart package and the Complete package. Smart package is a little bit more for someone who has bought a property before, who is a little bit aware of the process, has the time and also the will to be a little bit more invested in the process. So yeah, more for the independent buyer, so to say. And this is where you do get access, obviously, to a personal buying manager. We will do all the research that is necessary, like the property document review, the price research. We will be in contact with the selling agent, make the offer on your behalf, and also book all the third parties, like the appraiser, the technical inspector, and the notary. We'll review all the legal documents, so the purchase agreement, transfer deed, mortgage deed, statement of completion, that kind of stuff. And we'll be there for the whole pre-transfer support. This comes to a total of 2,499. We ask a deposit of 499, and the rest is only due completely at the end when you're receiving the statement of completion. Then we also have the Complete package. This is more for a first-time home buyer, someone who is not very familiar with the process, or someone that just doesn't have really the time to be more invested in the process. Well, you'll get everything that we just mentioned in the Smart package, but we will also be there to schedule the viewings for you. We will also be there to attend the viewings for you. And I will also be present at all the in-person meetings. So this is the technical inspector, the notary again, final inspection, and we'll be there for the whole, not just pre-transfer support, but also the post-transfer support. So it's a little bit more invested. I can actually be there to hold your hand during the process. It can be rather nice. I have very, very soft hands, so that helps. But yeah, that's the Complete package. It's 3,999. Again, a deposit of 499. Rest only due at the end. Now, if you're looking specifically to buy a new build property, the process is obviously a little bit different. We actually have a webinar on this subject as well, so feel free to watch that on our YouTube channel if you have the time. But obviously we can go to viewings or do a technical inspection as the property doesn't exist yet. So we will go to the developers meetings or the selling agent meetings. We will help you with the search here and the registration as well. We'll do a price benchmark. We'll do all the checklists, make sure that all the points of attention have been met. And then we're there during the whole pre-transfer support. This is 2,999. Again, same deposit. Unfortunately, not tax deductible, but again, like I mentioned, keeping our fingers crossed, hoping that will change in the future. Then, Robin, your costs.
Yes, we do also charge something. We also, the first off, we have a small down payment to get things started for the financial analysis that we do. That's 299 euros, and that basically what we do for that is that we don't just do a basic calculation. When you can always call a bank or do an online calculation. By the way, that's exactly the same. When you call a bank, they do a perfectly fine job if you just want to know that, but then they use their own online calculator, and if you check 5 different online calculators, you will get 5 different numbers. Now, we are an independent a mortgage broker, so that means that we work with all the banks available in the Netherlands, but also means that we can always see the best interest rate there. Now, what we always do is we don't just do a basic check and give you an estimate of your mortgage options, but we give it to the euro exact. So that's the first step, financial analysis, to get things going, to understand what your financial situation is. First, does it make sense for you to buy a house? Second, what is your range? Then we'll also already optimize your mortgage setup. So you always know exactly what you can expect. What are the monthly costs? What are the gross and net? So what is your tax benefit? What are the total costs of all the people that you work with? Everything. So at any time, you're always fully updated. We don't only do this once, but as mentioned, at any time we can do a recalculation. So that means that we'll first start everything up, then we'll have about an hour call where I explain everything about mortgages as well, the process, as Ludo already mentioned, but then more specified to the mortgage process, so you know exactly what you're up against. Then anytime that you find a property and think, well, hey, this might be interesting, or this is Ludo sent me this property to look into, I will check it as well, but then from the mortgage perspective. So what is the ground lease, for instance? What is the energy label and how does it affect your mortgage? If you buy an apartment, you'll be part of the homeowners association. All of that will have an impact on your mortgage, or can have an impact on your mortgage. That's all something that we'll check for each and every property that we'll look into, to make sure that when you are interested in a property and you want to put in a bid, or first you do a viewing, that you walk into the house and you see, okay, well, the lighting is nice here, it's nice and high ceilings, or it's close to a children's playing area, if you like that. If you don't, then stay away from that, obviously. But then you don't only know that, but you already know, okay, if I want to live here, this is what I have to spend per month. And we do that for each and every property that you like. Now, if you really want to put in a bid on the property, we also set up a so-called mortgage certificate. What this means is that we say, okay, sure, we from Mr. Mortgage, we have checked the financial situation of these lovely people that want to put in a bid. And we can tell you, yes, we can secure the financing for this property. That gives more security to the seller. And Ludo can tell you this as well. If the seller experiences security with the bid, they're significantly more likely to accept it. So with all the people that you work with, we want to optimize your chances of your bid being accepted as well. We don't have something like a pre-approval as you have in other countries, but this mortgage certificate is pretty much the same thing, but then in the Netherlands right here. Now, we have different packages you can see. So the middle two are the most common ones. As a first-time home buyer, you can see the first-time home buyer. The 299 euros down payment is obviously already included in this. So 2,999 is our total fee. 299 at the start, and only when we get you to the notary, you pay the remaining 2,700 euros as a kind of, you can call it a success fee. It's a no cure, no pay. So if we cannot get you to the notary, you don't have to pay us. Now I can say that with quite some security, because we already do this extensive check first off. So therefore, I know I can get you to the notary when you buy a house. Same goes for buy to let or keep to let. This means that you buy a house or to rent it out, or you want to keep your current property and refinance it to an investment mortgage, for instance. Those are also definitely options, and refinancing. This would mean, indeed, if you would change it to an investment mortgage, or what might happen as well is you currently close your mortgage right now at an interest rate of 4.5%, for instance. And then in 6 years, you want to change your mortgage for a lower interest rate. That's something that we can also help you out with to make sure that everything is realigned. Those are all options. Now, we have it doesn't really matter how expensive the property is, what the value of the property is, what the bid that you put in. Only if the value of the property is 1 million or up, the banks are a bit more fussy when it comes to the mortgage application. They are significantly more extensive in their checks, so that takes more time. So then we charge a somewhat higher fee of 3,799 euros to cover the extra hours that we put in. All of these fees, and I'm not just saying this to annoy Ludo, but our fees are tax deductible, so you get back approximately 37% as of next year. So yeah, the tax authorities will help you a bit as well in this. That's basically what we do. And again, if you have another situation that applies to you, let me know.
Perfect. Thank you. Thank you. Cool. All right. Well, before we get into the Q&A, we are very, very keen on hearing your experience. So the final and last poll. let us know if you missed anything, or if you specifically didn't miss anything. We would always like to hear. And then after the poll, we'll move ahead to the Q&A. I see we still have some questions that are mentioned there. My colleague Rafaela will pick those up, and we can do a live session on that. So we see some nice scores coming in. That is always great to see. Thanks very much, guys. And if there's anything that is not mentioned in the poll as something that you would like to get more information on, also feel free to pop it in the chat. It's always okay. Nice, perfect. Cool. Well, thanks very much, guys. That's great to see. All right.
Did we do good? Did we do well?
1, 7, and the rest is all 8s, 9s, and 10s. The majority being 10, so that is amazing. So that's
we made our parents proud. Very good.
Yeah, exactly. Hey, that's why I'm here. Huh? Cool. All right. Thank you. Let's move on to the Q&A. So, Rafaela.
Hello. Thank you for the presentation. It was very nice, informative. Thank you. So we have still a few questions left. I believe the first one would be for Ludo. It is from an anonymous attendee. There is a general sentiment for housing prices falling in 2023. What's your personal opinion?
Yeah, fair question. A question that I get asked quite often nowadays. Well, I think there's a very big difference between big cities like Amsterdam, Rotterdam, Den Haag, but also Groningen, Eindhoven, Utrecht, Haarlem. These are all places that are very desirable. So a lot of people want to live here, but funny enough, they're not that big of cities. Of course, compared to smaller towns, obviously, yes. But if you compare it to cities like New York, Boston, Beijing, that kind of stuff, it's small. So it's already fully built, not a lot of new buildings being built in these places, and therefore, therefore the demand is still going to be higher than the amount of offer on the market. And if this is the case, then prices will either stay stable or slowly keep increasing in these places. I do think when you're looking at specific bigger houses outside of these cities, yes, it's going to be difficult to sell, and therefore prices might go down. Fall is a big word because that would mean that they would drastically go down, but they might decrease a little bit. Also, with the whole world being in an unstable situation with a lot of inflation and that kind of stuff, I do see some instability there. So it can go down, yes, but I don't see a huge drop in prices happening anytime soon, especially in the desirable places of living. So if you're an expat and you want to experience living in Amsterdam or in Rotterdam for a couple of years and then go somewhere else, then yeah, it's still a very safe investment to do. Obviously, I don't have a glass ball, so I don't know what's going to happen. I mean, I didn't predict COVID. I also didn't predict the whole thing happening in Ukraine and Russia. So these things have impact on housing markets. So who knows what the next thing is going to be. But as for now, I don't see any crazy things happening.
Perfect, thank you. There is one question from Tobias. This one is for Robin. Can you already get it in a principal mortgage offer before making an offer, so you know that you get a mortgage up to a certain amount?
Yeah, Tobias, thanks for the question first off. No, you don't have the 100% security, but this is kind of where our financial analysis comes in, and this mortgage certificate comes in. So you cannot know for 100% sure. You cannot go to the bank and submit your documents already. There will be a pre-approval, and that's unfortunately simply something that does not exist in the Netherlands. To be perfectly honest, you have it in, for instance, the US, though then you bring your documents there, they will be assessed, and then you get a pre-approval, but with a list of disclaimers this big, and as a bookwork, essentially. So it's a lot of disclaimers that you will get there. So what we do is pretty much the same. So we already do a financial analysis, so we know what your financial situation is. So if you have a permanent contract and we know that you have some savings available, and for instance, Ludo has checked the expected value of the property, then we know that we can secure a mortgage for you. When it comes to your income, there's no question. And this is also why it's always nice to have an appraiser visit the property quite soon. So when you sign the property, when you put in a bid and it's accepted, it would be the best thing to have an appraiser visit the property right away, because then you know, preferably even before you sign the purchase agreement, you already know what the value of the property is. Then you know the value, so you know your mortgage will get approved on that, and we already know that based on your income, your mortgage will also get approved. So then it's a 1 + 1 and you're good to go. So that's about the certainty that we have. You, as a financial advisor and financial specialist, I will not give you a full 100% guarantee, because it could be where the 0.1% uncertainty is usually that I don't know for sure that you didn't secretly close 15 different new loans when we're securing your mortgage. But that's about where the uncertainty is. So yes, we pretty much know when we have all the documents ready. Yeah.
Perfect, thank you. There's one question from Leila, and I think it's for both of you. Can you highlight how this process and the ability to buy a house might be different, if at all, for expats who are non-European citizens and whose residence relies on a highly skilled migrant visa?
Yeah, well, from a purely a buying perspective, there's not a huge difference, to be honest. If you are a non-EU residency or a non-EU citizen and don't have a social security number or a BSN number, then it becomes very difficult, but more in regards to getting a mortgage. If you are buying a property just with cash, then it's actually rather easy currently to just buy a property. Obviously, you will need to, assuming that you are not going to live in the property, then you will need to pay the 8% transfer tax and that kind of stuff. But in general, there's not a very big difference, just specifically looking at the purchase of a home. I think it becomes a little bit different when going for a mortgage. Is that correct?
No, not necessarily. I mean, sure, there's a lot of banks in the Netherlands. There's over 40 different ones, and different banks have different conditions. There's some banks that are a bit more hesitant for very unclear reasons to me, that they are a bit more hesitant to secure a mortgage for somebody that's outside of the EU. But when you have the correct residency permit, being, for instance, a knowledge migrant, so an expat, then it's pretty simple, and it doesn't really make any difference if you're from outside the EU, from the EU, or a Dutch resident even, then it doesn't make a large difference. So yeah, that's basically it. Just make sure that you have indeed, as Ludo already mentioned, a BSN, so a Dutch social security number. And if you do have any residency permit, a residency permit that is different from, for instance, being an expat or a knowledge migrant, then just check in with us. There are still possibilities, but it really depends on what your situation is. Also, if you buy a house alone or together, and what the residency permit says from your partner, from outside or inside the EU. So all that makes a difference, but it doesn't necessarily have to be more complicated or anything. Yeah.
Thank you. Let's go to the next question. Do you think with the current interest rates that it is still beneficial to buy a house now, or is it good wait for, sorry, I missed the question now, to wait a little bit?
Yeah. No, the question is quite clear there. The interest rates, as I mentioned before, sure, they're higher than they were before, but that mainly regarding your gross monthly payment. The most important thing is where we can see the shift right now is probably 0.3, maybe 0.4%, I think, over the next course of a year approximately. Again, with the disclaimer that if nothing crazy happens, even more crazy happens than the world that we're already in. So then I don't necessarily expect to be any large shift there. But this doesn't necessarily affect your monthly payments significantly. So therefore, the most important thing to do is to check, why do you want to buy a house? Is it just because you want to buy a house, or does it make more sense financially? And have somebody check your finances before you make such a choice. So first check, what do I feel comfortable with in monthly payments? So don't focus too much on the house that you want to buy, but first check, okay, what do I feel comfortable with that I can spend on housing every month? You can maybe check that a bit with your current rent that you pay. Do you feel comfortable with paying that, or are you okay with a bit higher or prefer lower? Based on that, you can then decide, okay, it doesn't make sense for me to buy now. What can I buy with my budget right now? And does that make sense in the housing as well? Because in the end, if let's say the interest rates drop by 2%, so they're not 4.5, but they're 2.5 suddenly. What happens is, sure, you can borrow more because the interest rates are lower, but then you can expect that the prices of the value of properties go up as well. So then that benefit you lose kind of in that sense as well. So short, again, check if it makes sense in your situation, and check if you feel comfortable in what you do. Just make sure that you're well informed about what the pros and cons are.
Perfect, thank you. There's one question from Ashley to you, Robin, again. How is it determined normally for how much percent of mortgage you can get from the bank? And do we consult about how much mortgage we can get before bidding? Yeah, this one I think you already answered.
Yeah. So definitely, we'll definitely inform you about what you can secure as a mortgage. This is why it's so important to not just have an estimate, but a detailed financial analysis done by a financial specialist. That's one thing. How it's determined what percentage of the value of the property you can take out. Basically, you can take out 100% of the property value as long as you can afford it as well. So let's say your mortgage cap, so your maximum mortgage on your income is 500,000 euros. If you then buy a house with a value of 600,000 euros, then sure, you can get a maximum of 5. But if anything, as long as you can afford it based on your income, usually you can secure a mortgage for the full 100% of the property value. This is what the appraiser says the property value is.
Great, thank you. Megan is asking, what's your rate outlook for the next 5 years? This is a trick question. Sorry.
Yeah, no worries, go ahead.
If the rates are to fall substantially and I have a fixed 10-year, what are my options?
That's a very good addition. So I think my crystal ball is right next to Ludo's crystal ball. So I don't know. I've dropped it in the canal a long time ago. I simply don't know what's going to happen. Sure, if you would ask me, let's say 2-3 years ago, what my outlook was for the next 5 years, I didn't expect this increase suddenly, but that was mostly put in play by everything that's going on in the world right now. So that's always something that can happen. So now the outlook for the next year, I already shared with you. So 0.3 up or down, that can happen. I don't necessarily expect a larger shift right now. Also, what the European Central Bank has shared as information. So I don't necessarily expect a massive change there. Looking into the future even more. So if we are in a kind of a status quo right now in the world, hopefully everything that's going on in Russia and Ukraine will calm down soon, obviously, but let's say the financial market stays pretty much the same, then it's significantly more healthy, as I mentioned before as well, with this interest rate of, let's say, somewhere between 4 and 4.5%. So let's say we are there, then I don't necessarily expect a large shift there in the foreseeable future. But let's go to the second part of the question. So what happens if you fix it for 10 years and then after 5 years, the interest rates drop? Can you benefit from that? Yes, you can, but you fix your interest rates. So you have security, but the bank also has security. So the bank expects your mortgage payments at 4.5% for the next 10 years. Then after 6 years, if you want to change it so you can benefit from the lower rate, the bank says, well, sure, that's okay, but you have to pay a penalty. And that means that the remaining 4 years that you would pay, you have to pay a penalty over the loss of income that the bank has. Again, quite specific question. If you want to discuss this further up, then let's schedule a call, but this is basically how it works.
Thanks, Robin. Is it more difficult to get a mortgage if you have only recently moved to the Netherlands? Or what kind of credit record is required?
So no, I've actually closed mortgages for people that didn't even live in the Netherlands yet. The most important thing is that you have a BSN, Dutch Social Security number, and that you have a source of income in the Netherlands that is durable. So as soon as you have an income, either with a permanent contract or with a temporary contract, but with that intention that your employer will keep you on, so permanent contract or a temporary contract with intention, then we can already secure a mortgage for you. It kind of depends on what lenders. Some lenders say, okay, sure, we'd like you to be in the Netherlands for 2 years or 6 months, but that's a minority. The majority of the banks will give you a mortgage as long as you have income and you're not in your probation period. That is very important. As long as you're in your probation period of 1 or 2 months, you cannot yet secure a mortgage, but if anything else, no problem at all.
Thank you. Another question for you, Robin. Is getting non-fixed interest rate too risky in your opinion?
No, not necessarily, but it kind of depends on what you feel comfortable with. So when you have a variable rate or a floating rate, so what that means, every month your interest rate can change. Right now, that interest rate is lower than when you fix it for 5 or 10 years. But then what you have to do is you have to check your interest rate changes every month. And you have to pinpoint the moment that you say, okay, now I want to fix it for a longer term because the interest rates have dropped, for instance. So if you feel comfortable in checking that regularly, and if you don't wake up sweating at night and think, what did I do? And then you're good. You can do it. Just make sure that you know what you're about. There's kind of a nuance as well. So you can fix it for 10 years or 5 years or 20 years or floating. But you can also say, well, let's fix it for 2 years, for instance. And then you kind of, it's kind of a middle road right there. So yeah, you can definitely do it, but it has to be your style, so to say.
Perfect. That's it. I don't see any other questions at the moment.
All right.
No, I think that's it. Thanks very much, Rafaela, for managing the Q&A. It's always very, very nice. Thanks, Robin, as well, for being here, my right-hand man when it comes to mortgages.
My pleasure, as always. And thank you for hosting again.
You're very, very welcome. And thanks for everyone for joining this webinar. If there are any questions left, let's see. Yeah, if there are any questions left, feel free to actually reach out to us when it comes to the buying process, the Expat Housing Network, and otherwise have a chat with Robin or one of his team members when it comes to mortgages. Tomorrow, everyone will receive the presentation slides together with the recording. So feel free to send it to anyone, or if you want to rewatch it with your partner or whatever, that is definitely possible. And then if you want to have a chat about your specific situation, a specific scenario, then we are here for you. For now, enjoy the rest of the day. I still see the sun is shining, so hopefully that will be the same after 5, so I can go for a nice walk. And then I wish you a good day, guys. Thanks very much.
See you guys.
See you soon.